As we head toward the weekly close in the markets, today, as always, we're keeping an eye on the data coming from the US and the data that will be released from the US. The whole world has its eyes on America, waiting to see when it might attack Iran. And in the financial markets, everyone will also be watching the latest developments in the Personal Consumption Expenditures Index coming from the US tomorrow. Now, first of all, there was a statement from the White House spokesperson who said, "Our first choice regarding Iran is diplomacy," and made a call to the Iranian administration. In this call, he said it would be very wise for the Iranian administration to make a deal with Trump. Otherwise, there'll be military intervention, he said. So in short, the US is clearly saying we will attack Iran, and they're already announcing this to the markets, which is why anxiety in the markets has increased. We see that while investors are selling in the stock market, they continue to increase their gold holdings because this period of risk aversion continues across all markets. When we look at the markets today, US stock futures are down, Borsa Istanbul is down, but assets like gold and silver are in demand, and it's clear that investors' efforts to avoid risk are continuing. And I want to say right now that we will be closely following America's Iran agenda in the coming period. Don't forget a single word I've said. I have a lot of notes I've taken, and we'll have a lot to talk about on these topics. Aside from that, the US Personal Consumption Expenditures Index data coming out tomorrow is, of course, important to the Fed, but I want to point out that no matter how good the data is, the Fed has no intention of cutting interest rates. Look, for example, the US has gotten really good numbers in the inflation data. In fact, for the first time since March 2021, core inflation has dropped to 2.4%. So when we look at core inflation, the US has the best numbers in about 5 years. And even with these results, they're still not considering a rate cut. On the contrary, they're saying they won't cut rates. They'll keep them steady, and that they have concerns about the markets, and so on. In fact, that's where the conflict between Trump and Fed Chair Powell comes from, because the economic management really doesn't trust what Trump will do. They have concerns about whether he'll cause inflation to skyrocket. Amid these concerns, for example, while yesterday it was about tariffs, tomorrow we might be talking about new issues or new agendas that could trigger inflation, like oil. But if we look at today, if we say, let's evaluate today, where are the markets headed? What actions have been taken in which markets? And where do we stand with our current positions? Let's take a look at these through the charts. And before we move on to the charts, of course, I kindly ask for your support against the YouTube bots and algorithms. I want to emphasize that every like and comment is very important to me. And besides that, today is the first day of Ramadan. I wish everyone a blessed Ramadan. First of all, when we look at the NASDAQ 100 index, we see that the selling pressure on technology stocks in the American stock market is continuing today, and the futures market as well. When we look at the chart on a daily basis, the movement within the negative zone continues. I think the risky outlook in the American stock index and its stocks is persisting. Since there have been very sharp declines in technology stocks, there are some signs that certain stocks are approaching bargain levels. So short-term upward movements are definitely possible. But as we head toward the weekly close on the American stock market side, I still don't see any positive signs. And if it loses the 23,950 support level, we could see even sharper declines on the American stock market side. In the S&P 500 index as well, it's highly likely that losses will deepen further if the 6,755 level is breached on the daily chart. Right now, on the American stock market side, we've already seen very steep declines in tech stocks, mid-cap stocks, and growth stocks. There have been drops of 50, even 60%. We've only seen these kinds of declines in large companies to a very limited extent, but we could also see these declines continue in those as well. So I want to say that I have a negative outlook when it comes to buying new stocks. But look, when I turn to Borsa Istanbul, it's the exact opposite. My positive outlook on Borsa Istanbul still continues. Today, Borsa Istanbul is experiencing a sell-off, and in my opinion, it's a very normal selling movement. We've seen this happen in this area before as well. We saw the same movement here in the first week of February. It's holding a cloud region. It's also holding at the 4-hour level. Of course, we look at this more on a daily scale, but the 4-hour charts also give us some insight. In short, what I want to say here is that I expect Borsa Istanbul to maintain its current region and continue its upward movement. Based on my expectation of a rise here, I humbly prefer to hold my positions and I've become a bit more cautious with some stocks. I also talked about these things last night during the live chat for members. It's best to keep some distance from aviation companies and shift those assets toward other stocks. I continue to answer questions about these stocks, examples, and inquiries. And in the BIS 30 index, meaning the top 30 companies on the stock exchange, we can see that it has dropped to a pretty solid support zone. My view is that both the top 100 and the top 30 companies on Borsa Istanbul have gone through a correction, and I believe that after this correction, they will continue to rise again. We've made good gains on Borsa Istanbul, and I expect these gains to continue and even increase at least until the end of February, maybe even into March. As for gold, I'm telling you that it's in the most solid, strongest trend structure. For a long time, we've discussed every area of gold in detail, and even during the recent drops, I wanted to make a very clear announcement. I even made statements like, gold seems to be at a buy level today. Some people just don't get it. I mean, even after all this explanation, there are still people asking, so should we buy gold now? For those people, excuse my expression, but sometimes I try to explain things as if I'm talking to an elementary school kid. I mean, a lot of people are smart and quick to understand what I'm saying, but for those who don't get it, I try to break it down even more so that more people can benefit from what I'm explaining. But to generally improve financial literacy, you really need to follow the videos closely. When you follow closely, you end up speaking the same language and being on the same wavelength as me anyway. In summary, here's what I think about gold ounce. I told you that within its recent range of movement, look, it showed a move here where it tested the cloud region again on the daily chart. You know, for us, a buying zone was the area below around the $4,500 levels. Right now, the $4,800 levels have worked well too. In order to build a strong upward trend on the 4-hour chart, in other words, to show a rapid upward movement in this area, it needs to hold above the $5,100 level. If it holds, that will carry it up to the $5,500 level again. We're moving into the last week of February. In March, I'll also be expecting an upward move in gold. For silver, in the short-term trading range, the $76 level can now be followed as support. Look, for those who want to trade here, for those looking to do short-term buy and sell, I mentioned that the $71 to $73 range is a good buying zone. Those investing in the silver market should keep a very close eye on the $76.50 level as support in the trading positions they choose to take. If it stays below this level, they can liquidate their silver holdings. Because I don't think the trend structure on the silver side is as healthy as it is for gold. It's important to really understand and grasp what I'm saying, friends. You know, I try to give advice to buyers, sellers, and holders all at the same time. You need to pick out the information you need from what I'm explaining here and use it to evaluate your own trades accordingly. So for silver to show a clear return to the positive zone like gold, it needs to move back up to the $81, $84 range. Let me mark that here as well. Look, for those investing in gram gold, when we look at gram gold here, we're seeing figures around 7,000 lira. But some people say that they're buying it for a higher price at the jeweler. There are also comments like, prices are higher in the Grand Bazaar, physical gold prices are higher, what should we base our purchases on, and so on. Here, we're looking strictly at the charts. When you buy from your jeweler, things like labor costs or exchange rate spreads are included in the price, so it climbs a bit higher. And right now, we're in a period where there's not much gold in the market, and jewelers don't really want to sell gold. That's why the margins are a bit higher. So, in my opinion, the best choice would be to buy gold assets through digital channels. Public banks have low gold spreads, so you can consider those options. Or, specifically in the crypto market, I buy the Tether Gold product on OKX Trail. This product is fully backed by gold, has no exchange rate spread, can be bought and sold 24/7, and is considered safe by both the markets and myself. That's why this is my preference. So if you're thinking about making a similar investment, I'm leaving a link for you below the video about this. You can make this investment on OKX Trail. To sum up, as we head toward the weekly close, how are the markets looking after the data coming out of the US? To put it more briefly, I'm cautious when it comes to the US stock market. After the correction in Borsa Istanbul, I believe the upward trend will continue. As for gold, I already think the trend is quite strong, and I believe it always makes sense to keep gold in your portfolio. I'm a bit more cautious about silver, but for those who follow and invest in silver, I think they should manage their positions closely and keep a close eye on it. If you want to get more information about these products or others, you can join our YouTube members chat section and ask me your questions there. And based on the more detailed information I've shared, you can position your trades and manage your portfolio accordingly. Speaking for myself and on behalf of the YouTube members chat, I can say clearly that we have achieved returns well above the market average, and I believe this will continue in the coming period. Aside from that, since we mentioned oil, I'd like to briefly show the oil chart. With oil breaking above the $61 level, a strong trend structure has started to form. In oil, once the $67 level is broken, it will enter a zone where there's a significant gap ahead. That's why I think we need to closely monitor the oil chart as well, especially at this point, when tensions between the US and Iran have reached their peak. When we look at the cryptocurrency market, it's once again one of the areas most affected by global tensions. Since the last video and last night's broadcast, there really isn't much new to say or discuss specifically about the crypto market, because prices are still in the same place. Even though the indicators I follow show some signs or signals of being undervalued, there hasn't been any new change in the trend or any new indicator forming here yet. For a while now, Bitcoin has been continuing to test the support area at $66,250. We're keeping an eye on this level as well. It last tested this level just last week, moved upward, and then tested it again. At the very least, it hasn't shown a daily level breakout here. It's still holding this level, but the indicators are also continuing to climb upward. Look, there's a cloud indicator here stretching from the $84,000 level down to $78,885, and this is going to be a key resistance area. So the $71,000 level here isn't all that important. This is the area where we could say Bitcoin has turned to a positive trend. And I want to point out that the area it's currently in is actually quite a big gap. In terms of altcoins generally moving into positive territory, when we look at the dominance of what we call others, that is, altcoins outside the top 10 crypto projects, it has entered the area where it showed a breakout on the weekly chart. So it looks like this trend will most likely continue next week. This tells us the following. If Bitcoin doesn't show any deterioration or weakness in its trend structure, we could start seeing even more gains in altcoins next week. These data, these indicators, need to become a bit more positive. Other than that, there's nothing else to add for now. No matter what happens with the prices, I hope you're doing well. See you in the next video. Take care of yourself. Subscribing to my channel and turning on notifications is an investment tip for yourself, with the intention of informing you about developments before they even happen. See you again soon.